Hi, everybody. My name is Kevin Donovan. Welcome to the Chief Architect Forum News. Today, we're going to be talking about enterprises and AI from the hype cycle to reality. A couple of years of wild promises. The AI wave is hitting the shores. Pilots, platforms, there's a lot of stories taking a look at whether this is a turning point or an inflection point. Some of the largest deployments are being announced. We're looking at results. There's some sobering data on how some initiatives are not scaling. Others are leading the way, shaping baselines for expectations. Brice, what are your thoughts here? Let's discuss about how the hype cycle or bubble is or is not looking.
Yeah, I think this is a great point. There's a lot of discussions recently, especially you start watching the business news and you see, one fund manager gets up and, starts talking about how he's heavily invested in going all the way into NVIDIA, and he starts hitting all sorts of horns and stuff. Won't mention any names here. And then another, analyst will say, well, I'm betting against it. It's a bubble that's going to burst. What's the truth behind it? Is it a bubble? Is it a trend? And how do we treat this as architects as we're going through this? So this is certainly a lot of money involved in this, right? Right now we're talking about over $500 billion of global investment from 2023 to 2025, with projections by 2034 of 3.68 trillion. Probably blow that away if it's real. So huge, right? The flip side, though, a lot of these startups have huge PDE ratios, and they are having huge revenue multiples up to 20 to 40 times. So if you're investing in tech stocks, it's not the same as the rest of the market. I think that's really an important point. And let me put this as maybe a first question, Kevin, because I think you have a unique perspective on this. It's with tech stocks, is it reasonable to command a higher revenue multiple?
Well, back of the napkin, if you have $500 billion in investment seeking a 20 to 40x rev multiple, where are we at? That's easily, we don't do public math, but I'm going to shoot at $10 trillion. What's the global GDP these days? Something over 100. 10% of the global GDP? I don't know. Now, of course, not all those will survive. But yeah, it's, your prompt at the end is this history repeating? Is this .com times 10? Is it rewriting a bit? Is it just rhyming? Some of it will resemble, some of it will not. Some of it will remind, some of it will, is there going to be a lot of pain in the future, or are we going to avoid a lot of the pain? That's a good question. We're talking about this now as architects, not as investors, right?
Correct. And please, no one take investment advice from us. If you make any investment decisions, they're your own, especially in this crazy world we're in these days. Having said that, though, the next question is, we're seeing some classic bubble indicators. So these people that say that we're in a bubble that will burst, a lot of them are comparing it, say, to the .com burst. And they're saying, yeah, the valuations are detached from fundamentals. I don't know what your thoughts are there. I'm thinking the fundamentals for these type of firms is a lot different than in the .com
era. Yes. I think there's some fundamental differences. There is a lot, it's not pets.com version 2. There is, there are real companies with revenue and I mean also outside of the foundational model companies. But there are certainly aspects of bubble here. When you were going through this, it reminded me just the other day, there's a story, and I'll attribute it to, I don't know, Rockefeller getting his shoes shined in 1908, let's call it, and the shoe shine boy like asking him about and giving him stock tips, and he thought, that's maybe a bad sign if everyone's this interested. Similarly, my wife and I had a talk about this over dinner just the other night. She's like,
Oh,
do you think this is a bubble? Is there real? I mean, are people making money or is it fake money? And I was like, oh, wow. If you've noticed and are interested and are asking me that, that might be a signal that we're getting somewhere where we don't want to be. Because, yeah, there's a lot of public interest in it. And are people chasing these stocks? Of course they are. So valuations are a little frothy, and valuations might be bubble tinged, certainly.
and certainly if we think about it, the return on investment may be unclear for a lot of enterprises, and I don't think people need to. Not everybody's going to be a winner in this era. Let's face it, right?
Yeah.
We're talking about a new general purpose technology being introduced, whatever that means, right? I think that's part of growing acceleration of innovation, and I think it fits in nicely with what we're doing. But again, a lot of people are saying, yeah, it's this bubble pattern, and some of the skeptics are pretty influential. The Yale School of Management talking about how the bubble will burst. I mean, they've actually went through this is what could happen, and
so they're saying it is a bubble.
If I understand what I saw very quickly, I haven't read their stuff directly, but if I understand the commentary on it,
yeah,
I believe it is a bubble that they're calling out will burst, right?
Okay, interesting.
And that means the other part to this too is, yeah, we have governance gaps, all sorts of risks, and there's the big question: what happens if CapEx outpaces value realization? I just don't see that happening, but what I can see is part of that bubble bursting, perhaps. Like I hear that there's going to be companies that are losers, and we're very early on right now. We're not seeing the impact of that. And the next obvious question is, when you start to have companies that start to go under, because there's so much out there right now, right? It's got something. Maybe I'm wrong. Well, how does that affect the market? And what I would shift to on that one is that the foundations are real, right? When you look at, say, an NVIDIA, if you say, well, is this real? I mean, they've got, what were we saying, a half a trillion? Is it $500 billion market cap right now? Or 5 trillion?
$5
trillion. $5 trillion.
Yeah, market cap.
Okay, so there we
insane. Yeah.
So there we go.
First on the planet.
First on the planet.
Yeah.
This is huge. A lot of people are using that, are using the NVIDIA product. We had a conversation the other day, which was interesting. A lot of people aren't just using the GPUs for AI. There's other uses for them that are very productive, right? We don't know where they're going to go, but they could go places. Right now, I would even argue that if a company like NVIDIA disappeared, it would be catastrophic to the S&P. I mean, they're like, I think something like 5% of the S&P right now, if I understand it right.
Oh, well, to the value of the index itself, yes. I think the more salient question is, what would the effect be on the rest of the S&P 500?
Okay.
If you go back a slide, for sure there's talent inflation. Mark Zuckerberg was offering some OpenAI engineers, I think, a salary of $100 million guaranteed for 4 years. And the last question is a really good one. What if CapEx outpaces value realization? But I think what we need to do is move away from the hardware. Yes, NVIDIA is a real corporation, but they are essentially in many ways selling the picks and axes and shovels,
Right.
And similarly with the foundational model companies, Anthropic, Google, OpenAI, but they're consumers. I think they're the ones who have to, where we have to look and see if CapEx is outpacing value. If users are not going to be able to use this technology to produce, increased revenues and produce value, that's when it starts falling apart. And that, I think, is what some people are questioning when you see these. I mean, there was that MIT study that said like 96%, I think they raised the number to, of AI initiatives, close with no value. That's where people start raising an eye and saying, okay, so everybody's like, Google and Microsoft and OpenAI and NVIDIA are all swapping $250 billion checks. Buy this from me and I'll buy that from you. That doesn't mean a lot if it doesn't end up being value for their end customer.
I think there's two concerns that when I hear that number, about 96% of AI projects not delivering value, there's two things that really come top of mind. The first one is, yeah, you're playing with AI. Are you really using it to identify value yet? Do you really understand it? It's still early on, and I expect a lot of failures. And I would expect that people that are, say, limiting their use of AI to process improvement are going to be really disappointed compared to the other people that really look at business model innovation as a whole in the company and the more dramatic results you can get by re-architecting your business. And the second part to this is, I would love to know the statistics around hammers. How many uses of a hammer results in some value, real gain? And I would say hammers are probably used more often than not without any value gain, yet they're ubiquitous. They're everywhere, right? And you're going to have that as people play with them. So I think there's going to be a certain amount of learning and sandboxing as we get to releasing AI.
Yeah, sure, right. The, key use cases today will not be the, altering, mind-blowing use cases of tomorrow. And not everything is a nail, as you point out. But, you have to find those use cases and implement them effectively for the CapEx to work. And that, I guess, is kind of the question now. Funding all of the axes and shovels and the foundational model companies is taking a lot of fuel, and is it producing anything, at the other end? It's a good question. I mean, OpenAI isn't going to survive on my $20 a month.
There's two really good points that come up here. I'm going to gloss over one and then get to the meat of what I think you're saying. The first point is, maybe the foundations for AI are a little bit different. It's maybe a real capability that we can use to deliver real general purpose technology changes. And the two things there is, one, it's integrated with cloud and SaaS services, so it's everywhere. It seems to be a natural fit to where we're going. It doesn't seem out of place as an invention. Like, I don't have to think that aliens gave it to us or something. It totally makes sense. There is measured productivity and revenue uplifts in some companies. And the real question I think that you've really hit, though, is this a general purpose technology or a bubble? And the argument would be that, well, every general purpose technology kind of looks like a bubble before it changes the world, whether you talk about railroads, electricity, the internet, and now AI. And the thing is that these bubbles do fund infrastructure typically, and you were pointing that out. It's right now they're bringing the shovels, the picks, and the axes to build that infrastructure. It's so early on, and I think I'm gonna bet the other way. I think that this market is going to be so huge that we have no idea what we're in for. Because if this is just the infrastructure building out right now with these numbers, what does it mean when we actually get general purpose technology in place?
Yeah, those are interesting examples. Classic. I mean, I of course don't know if railroads was a bubble, if electricity felt like a bubble in the beginning, but I'm certain that yes, I mean, there's huge infrastructure costs for building those things out, similar to the internet, and similar to AI. It's interesting with AI that a lot of the infrastructure extends out beyond the actual providers.
Yes.
The railroads themselves could lay the tracks and build and run their trains on them. A lot of the rails that AI is going to have to run on is outside of the purview and control of NVIDIA and foundational model, chip makers and model producers. So
And
that's
I think you have a lot of the foundational stuff in place, and I mean you were really pointing that out. I think the idea, the fact that that infrastructure goes to the cloud, say, right? It's very everywhere. It's a good thing. And what's interesting is, MarketWatch actually came up with a study. They go, after 30 bubbles, AI remains the right trade. And I think what they were getting at is, if you look at bubbles and you look at trends that continued, there's a lot of indicators that this is a continuing trend. But the big problem from this is, how as architects do we treat this? And a couple of ideas here. I'm just going to put this out. AI is a capability layer, not a standalone product. So you need to architect it. It's if it is a bubble, I think it would be more standalone. If it's a foundational technology, it would be in the foundations, right? We're seeing some really core technologies come out of this. Things like semantic interoperability is a huge thing that's come out of this wave. It's not just large language models. I think everybody's like, oh, it's just the large language models. No, there's a lot of capabilities that allow us to integrate this into the enterprise. However, I think a lot of architectures aren't ready. I think this is happening really quick. Now I think you had some doubts about that, so go ahead. Let's hear them, Kevin.
No, I mean, I totally agree that it's more of a capability layer. I don't see things, it's not chatbots. It's interesting the focus that it's giving to data platforms, data products, integration, governance, on the whole idea of semantics and ontologies. Having quite the renaissance now. There, of course, is risk. And yes, many of those 96% that MIT looked at failed because everything surrounding that initiative was not ready. There's very low data maturity in many organizations, and you're not going to be able to scale, certainly, an important, effective AI initiative without quality data. That goes without saying, but needs to be said. So those, I think, certainly are the first things that we as architects need to be looking at and thinking about when we are advising organizations.
Yeah, just some guardrails. And one thing I do want to add to all of this, the other thing I think we as architects, we need to be cognizant is that the pace of change is accelerating. And I don't think we can sit back and wait for the next technology or the next general purpose technology to come in and then go, oh, we're going to change everything. I think we need to start looking ahead now. Like, there's things like quantum computer coming down the road, neuromorphic programming, optical. What do these things mean? I think as we start to build our enterprises, we need to have more of an eye on that than we ever have. And we need to make sure that things can interact. Now, having said that, I think that AI provides the foundation to do a lot of that. So it becomes a question, well, what does it mean to separate hype from capability? I think that's an important one. There are some real things that it can do. Am I going to assume it can do artificial general intelligence yet? Maybe not. It's a little bit early, right?
Yeah.
I still need, governance guardrails and stuff. Architect modular AI services, I think, is a great point. And especially depending on the function, I think this is important that we don't lose sight of. What is the function we're providing? And we may use a large language model right now. I know when they were in the early days, I read some articles that they were used to support protein folding. Great, great application. And then they started winning these protein folding contests. I would venture to say, though, that when quantum comes online, it's going to do way better in that same area. So we're going to see some change. It's not going to be like, so we need to be able to plug and play and move things out. I think governing, I'm just going to cover part of this, with ethics and telemetry, I think is important. And I think putting the two together, we need to ensure, as we put our AI out there to do things more rapid than ever, they're going to do things that we don't expect. How do we prevent damage from that is going to be the real question. And I think it's going to be really a measure of, when we bring in this technology, how well does it work? Not necessarily how fast do we get there. I think the speed is pretty quick. I mean, we're there already. It's pretty quick. So those are 4 points I think are useful to keep in mind as architects. What are your thoughts, Kevin? Do you want to add to any of these, or did I miss any?
No, the only thing I was thinking is that honestly, it feels like you could abstract for most of this, maybe not ethics, but it feels like you could abstract AI out of this, and these would be kind of table stakes best practices for approaching any adoption of a new technology.
I don't disagree, provided you're open-minded enough to consider what new technologies could do. Things like agentic AI add new capabilities where we might be managing swarms of intelligent agents. And so now you're not just going to use a KPI. Did my agent do well? No, it's going to be how did my swarm do? How did I do in an ecosystem? So I think you're right. I think we can use a lot of these KPIs. I think the focus is going to shift dramatically, though, in how we use them and how we actually measure whether the strategies are effective. I think I don't think we have the answers fully yet. I think there's just a dialogue starting now.
Yeah, sure. And certainly when they start iterating over their own performance and changing, that then becomes very tricky as there's drift and KPIs may become irrelevant and or actions could be not exactly as expected.
And the one point too I'll bring out, and this was something actually you brought up the other day, but as the hype fades, if AI doesn't get all the traction, the base foundational technologies behind it, the GPU and how it's being used, have a lot of other applications where they're being put to work. It's not the end of the day, right? Like we're seeing improvements in a broad range of areas from that. And let me put it this way, Kevin. Do you see a world where we would be stuck with data centers that we couldn't use?
Yeah, no, I don't think that's probably going to happen. No, I totally agree. So sometimes things don't land where you thought they were going to, but end up being useful in any case. So yeah, I would totally agree. If is there a valuation bubble? Sure, probably. That's maybe simply human nature and what's going to happen. But will it affect the value of the technology over long term? No, I don't think so.
I think the one thing that we've talked about before, though, is going to be that when AI comes on board, a lot of people are going to cut corners, or a lot of organizations. And I think you will have an emergent debt from improperly applied AI kind of things that people. I mean, that's inevitable, I think, right?
Yeah. Absolutely. Yeah. There will be a lot of cleanup to be done. There's a lot of tech debt that's being created right now. Yeah. But, I mean, that's just part of the growth and expansion of technology. That's okay. It's just that it's not so well addressed these days, but it'll have to be.
So let's ask the viewer a final question. Is this an infrastructure play? Is it a bubble? Or is it some sort of other kind of experiment? We'd love to get your thoughts below if you have a minute.
Yeah, where are we in the hype cycle? And if it is a bubble and it bursts, how do we recover? And what does it mean ultimately, for us as architects? Those are great questions.
Absolutely. Thanks, Kevin. Great discussion.
All right, you bet. Thanks, Brice. Thanks,
cheers.
everyone.